Good morning, Predicted Trades family. Hope everybody's doing well. Welcome to morning prep for Tuesday, March 15th. The Ides of March are upon us. Just gonna kill a little time waiting for folks to get in here. Overall, dealing with a small gap. Here we go. So we're dealing with just a small gap up. Right now, NQ kind of leading to the upside. We were up higher last night, and then we actually were kind of set to gap down. Caught a nice bounce around 4136.5. Sorry, I was just getting a message that YouTube might have been airing, but I think it's okay now. So, looking at ES, we're on a 30-minute chart. I'm going to step out to an hourly just for a second to talk about the lows. So, we had our gap down with the invasion and that low around 4101. We have not been back to test that yet, although we are getting close. We also had a zone around this 4136 that I built from back in time. And at least last week, that provided the low that activated buyers to try to take us higher, right? And they did. We got back to the mean for a rejection back down. So yesterday, our thesis was absolutely spot on. In fact, we're quite a few days in a row being pretty spot on. With our thesis on Friday, this gap up that hit all of our higher time frame squeeze tops, we said that this was kind of a fake push into fade the gap. We open and immediately fade down to 30-minute Ichimoku. That was the thesis for Friday. So we faded the gap, filled the gap, hit Ichimoku, locked up, caught a bounce, reject VWAP, we go short again, and right into the sunset. Yesterday, the thesis was pretty simple. We already hit our squeeze tops and 30-minute Ichimoku pre-market as well as the daily 8. Then we slipped near the bottom of the squeeze clouds before open. So the thesis yesterday was wait for a test of the squeeze bottoms and these key levels around 4190 and 4183. You can see the first 30-minute candle wicked down into that area, and once it started to bounce out, I was long on Qqq. Rode that up to 30-minute Ichimoku and daily 8. Locked up my calls and switched to puts to play back down to squeeze bottom. So basically squeeze bottom to squeeze top to squeeze bottom. So, looking at today, we've already started to push down to our key level and caught a bounce, the same level that gave us a bounce last week, that woke up buying algos and sent us back to the mean. So here we are again at that key level, and buying has already shown its face. So let's see what we get. We are trapped in between that level and the 30-minute Ichimoku with a an hour and a 4-hour squeeze bottom. This being the 4-hour. Here's the hourly. The top of the hourly is right in the middle of that Ichimoku, and right near the top. That 30-minute Ichimoku has a flat top right at around that 4198, 4200 psychological level. So let's see if we want to revisit squeeze bottoms and this 4136 during the cash session. If we do dip first and hold this level, I'll be looking to go long to play it back to the Ichimoku cloud, and 4200 where the squeeze top is. If we try to pop first, you could play long off of 4165 up to the squeeze top. Can we get through that today? Absolutely. If we have enough buying power stepping in to prop us up, we can easily get through this Ichimoku top and back to the daily 8 at 4220. We've got about 100-point ATR. So we could even get all the way back to the daily 15 if we really wanted to have a big day. But we've got a lot of negative news catalysts going on. Not expecting a full reversion of the mean just yet. So just playing what we have in front of us. We've got the hourly squeeze. I'll be looking to go long off the bottom of it. I'll be looking to potentially short near the top and near this 30-minute Ichimoku. Also, it's probably worth drawing a trend line from the highs, because getting through N2, that 4190, and even up to 4200 might mean getting through that trend line from the highs and starting a breakout trend. So these are the key levels I will be watching today on ES. And we do have that hourly, 4-hour, and daily squeeze. That daily squeeze is down with that 4101, which is the invasion gap down low. So that's the target to the downside if we do break this squeeze bottom and this 4136. In Q. Not surprising, very similar setup. We have our hourly squeeze at the bottom, at the pre-market lows in the bottom of this daily squeeze. And the top of the hourly squeeze is up at the 30-minute Ichimoku and at our zone above. So let's see, do we take a dip at open, hold pre-market low, and make a more lucrative move up, or do we start to pop first and catch a fade and then play back? We'll have to see. And let's just check in on NQ's gap down. So we have slipped below the invasion gap down on NQ overnight. Yesterday we held it towards the end of the day. Last night we slipped it a little, but you can see the tool that I have that builds zones around these inflection points. We slipped to the bottom of that zone, and now we have popped back to the top. So that zone could contain us today, and we just kind of chop around this 940 to 100. But if we can start to break out of that and get back up to this zone, we'll be at the squeeze top, I believe. Yeah, yep. So let's see, pretty tight zone and range that we are currently trapped in. Let's see if we can hold 13,000 and this pre-market low and start making the journey back up. The Ruddy is now below 2,000. And rejected the daily 8 pretty hard after trying to get above the mean, the daily mean. We have rejected and are right back down near the lows. We do have this big old daily squeeze. We have an hourly overlapping it. So let's see if we take a dip to 1920 and then start making the journey back to 1950, 70, 2000. YM kind of has more squeezes still intact. 1 hour, 2 hour, 4 hour, and daily. Definitely draw a trend line from these recent highs, because that will pretty much overlap this 30-minute Ichimoku. So on YM, if we can get back above 33,000 and push and get through the daily 8, we can start looking at upside. Yesterday, we really YM really struggled at the daily 8. It got through for a little bit during the cash session, just to get to the squeeze tops and the 15-minute, I'm sorry, the daily 15 MA, where it rejected, went back through the 8, and down we went. So now we're under the daily 8 and under the 30-minute Ichimoku. If we get up to that point, that's usually where we look to go short. If we can hold these squeeze bottoms, that's where we'll look to go long. But can we hold here at this first Keltner down and rip up through this 30-minute Ichimoku, this squeeze top that overlaps the daily 8, and just keep on trucking? Yes, that can absolutely happen. We do not need to visit the squeeze bottoms before going up. We do not need to tap these things before heading down. Just simple premise. We are trapped in this range. Want to see us hold pre-market low, take out pre-market high to keep trucking. Or if we reject pre-market high, we could go to revisit pre-market low and maybe slip further. We are still not to last week's lows on YM, so it's looking a little stronger relative strength-wise. And yes, we are not near this gap down at all. In fact, you could draw a trend line from the gap down and this low, and you'd find that we are coming to a wedge point. So definitely draw this trend line from the highs, the lows. We could break out of this wedge today, but we could just stay in it and have kind of an inside day. So I have to see what we get. But opening at that first Keltner down. Apple. Apple, as I say every day, is a big key gauge for tech, and was a big key gauge yesterday. Pre-market, it slipped below the daily 200, which it has not visited in quite some time. If you're not familiar, we have not tapped the daily 200 since May of last year, May or June. Since then, we have been sailing. This invasion gap down got us to the 200 and got us this bounce. Well, now we gapped below and rejected the 200. So definitely not good for Apple and for tech to be below the 200. Would like to see us get back above it as soon as possible for upside plays in tech. But we rallied up to it yesterday, rejected it. That sent the whole NASDAQ heading down. It's definitely worth drawing this trend line from the highs, because that will be resistance until we get through. We are in a very tight 30-minute squeeze. That spans basically pre-market low and a little above pre-market high. So VWAP seems to be cutting in the middle. Let's see if at open we have to dip down to 148 and hold pre-market low before taking off, or vice versa. Reject pre-market high and squeeze top before coming back for lows. But basically the range that we're looking at today there on Apple. AMD. Still holding above that big key 100 level. Even pre-market low is slightly above it. Draw your trend line from the highs. You can kind of use a flat level around 100, and we're coming to a decision point. Chips have been down, down, down for multiple days in a row. Wouldn't be surprised for chips to lead to the upside. If AMD can take out pre-market high, and it's basically at the squeeze top, and get through, we can get to, I'm assuming this is a 30-minute, yes. This will be an hourly, yes. So if we can get through the 30-minute squeeze at around 103, we can get up to the hourly squeeze at around 105 and the top of the Ichimoku, 30-minute Ichimoku. Getting above that can mean a change in trend and heading back up, especially if we get through the trend line from the highs. But if we continue to reject 104, 105, we are going to go down and test 100. Amazon. Amazon slipped with the rest of tech yesterday. Tried to hold up, but once everything started to go, Apple and the rest of NASDAQ, it had to follow. It held the first Keltner down, and now we have a tight 30-minute squeeze heading into today. So that kind of sets the high and low for open. Let's see if we pop first to this 2881, and if we roll back over with the rest of the market. Would like to see it hold yesterday's lows. The 3100 call did hit beast a couple of times yesterday. Hell, it might have even closed in it. So that is still a viable option to the upside. And obviously to the downside, we have these recent lows. So let's see if this 30-minute squeeze and yesterday's low can hold us up to start trekking back through 30-minute Ichimoku and back to the means. Cat provided some nice longs and shorts yesterday. Ultimately, it basically closed just a hair down from where it opened. So, kind of the importance of understanding when it is time to change directions, right? Cat, just like the longs that we took on QQQ yesterday, slight dip at open, ride it up to previous day's highs. It rejects, back down to squeeze bottom, but Cat ultimately is above its 30-minute Ichimoku. When this gives out and we fall below 30-minute Ichimoku, it can definitely mean downside for YM. So if Cat decides to take a little dip today to about 212 and hold this 30-minute Ichimoku bottom, could be a good spot to go long for continuation to these squeeze tops in yesterday's high. If we just get there and reject, it's a play back to 30-minute Ichimoku, and if it gets through that, it can be a larger short back to the means. CRM, a little weaker and under 30-minute Ichimoku, but at a pretty key level of support here around this 189, 190. So let's see if that can hold and start to send us back to this Ichimoku and Mission 200, which we rejected yesterday. Facebook. Seems to be finding support around this 185, 186. Sent us up last week with the rest of the market. It came back down with the rest of the market. But overall, Facebook is not heading lower after getting so beat up. So, might be actually back in play. Not necessarily today. We've got these tight squeezes. We've got Ichimoku and everything in the way. So it could be kind of an inside day bouncing around this stuff. We will have to see. But so far, it's looking like 185, 186 is a good spot to go long. If we go back to retest pre-market low and they squeeze bottoms, it would be a great spot to go long. But we are on trajectory to test the tops of things at open. So we'll have to see. It could be a tap resistance and fade to find support and then get going kind of day. Google. Definitely got beat up Friday and yesterday, but it's at the bottom of a daily squeeze and hit this 2500 close enough yesterday. So let's see if we revisit that low. It'd be a great spot to go long. We have 30-minute Ichimoku way up above kind of where all the daily moving averages are. So Google could set up for a great long off of this range around 2500 to 2520. So let's see if we can dip there and catch some long opportunity for this week. But, you know, a lot of bad news and whatnot going on. So it's definitely not the environment to try to play a multi-day swing long. But we are going to get bounces on our way further down. And we are back at recent lows. So just play the price action you get without overthinking all of the bad news catalysts. GS. Kind of the same as everything. Rejected 30-minute and came down yesterday to squeeze bottoms. Held. Let's see if we revisit 324, 322, yesterday's low, or well, 322.9. And these squeeze bottoms before heading back up to Ichimoku 330, big key level that we rejected yesterday. And the daily moving average is above. JP Morgan. Already kind of getting into its Ichimoku already. It's at 130.52. Yeah. So let's see if it can actually push a little bit more before open. It will be near the top of this Ichimoku and will give us a little more idea for if finance is going to be strong today or if it rejects and heads back down to pre-market lows. I'm just going to skip forward here, skip a few names. Microsoft held up well to 274, 275 level. So let's see if we need to revisit 275, 274 zone during the cash session. If market rolls back, that's where I'd want to see it hold to start playing along again. But it could just stay strong on this gap and push through 30-minute squeeze top around 279 and make its fight back to Ichimoku above. Netflix. Relative strength, not doing the best. It is down underneath the second Keltner. Tight 30-minute squeeze going on here between 329 and 333. So if it can hold pre-market low and fire out of this very tight range, which just spans like a few dollars, we could make a fight back to the Ichimoku top at 346. If we break to the downside, we have the third Keltner down at around 320. NVIDIA. And same thing on most of these names. We've got 30-minute squeeze, or, yeah, 30-minute squeeze, right at around pre-market high and low. So we are closer to the high. Would not be surprised for a pop up, fade back, and a hold to go higher, like I've described. But these are the levels to watch. If we break 209.87, we could go down to 206 and 200. But we do have this daily squeeze and the second Keltner down kind of aligning to hold us up. If we can get above pre-market high, we've got 220 up to about 223 of the Ichimoku to deal with, and the daily 8's going to be right around that 223 as well. Qs. We played the 326s up, got in the money. We played the 322s back, got in the money, and even more. Now we are back above yesterday's lows and the squeeze bottom. So let's see if we revisit 318. Would like to see that hold, and ultimately that 317.5, which was kind of the low of yesterday. Would like to see that area hold to start sending us through this Ichimoku and back up to 325. But we do have that squeeze top and this Ichimoku, which could provide resistance and send us back down to 315, that pre-market low. Chop is just beat up, but back down at these lows around 510. So let's see. Can Chop hold 510 and make its way back to 550? That could be possible. It's kind of been a leader for the ruddy to the upside and downside because it has so much weight. So let's see if it can hold 510, 500, start making the journey up. If we slip through, I mean, we're already almost at third Keltner down at 594, or 494. So could use a little bit of a relief. Back to 600 at least, or 650 before further downside. SPX, like everything yesterday, was a nice play up. Daily 8, Ichimoku, reject, head back down. I also had that trend line drawn, which if we kind of go down, smaller time frame. I definitely recommend doing this kind of stuff when we are in a trend. Draw in your trend lines from the lows, because the second that broke, we had one small bounce at a key level. If you miss the break of that trend line, just one little bounce and then we just down, down, down. To other key levels that caused a bounce or consolidation, or that we came back up to. So for today, stop. On SPX, with a small gap up, we're going to be back up over these key levels. So I want to see those act as support to start to send us back through the Ichimoku. But yeah, if these levels start to give out, this 41.79, 41.85, we could revisit yesterday's lows, this 41.57, and we do have a daily squeeze down at 41.40. and this second Keltner down at 41.25. Take a quick look at SPY. Closed around 417, gapping up almost $2. And pushing a bit hard and fast into the squeeze top. So, wouldn't be surprised if at open we see some rejection and pullback to test some key levels before heading through and firing to the upside. If we give out these key levels, we're going to revisit pre-market low in the squeeze bottoms. And Tesla. Had a pretty dramatic dip down to this daily squeeze bottom. Fought back to 800. Those 850s hit beast and provided a great return before it rejected 800 and went all the way back down. Which, when it rejected 800, that's when some of the further out puts arrived at beast. So, ultimately, you can see the trend line from the highs that we are approaching pre-market. Let's see if we can get through those trend lines in this 777 to fight back through this big fat Ichimoku, which could contain us for a good portion of the day. But if we reject the bottom of it and that 777, we'll probably come back to revisit pre-market lows and squeeze bottoms before making the journey back up. And last but not least, let's check in on Vixx. Yesterday, it was a pretty clear thesis. We are trapped between 32 and 30. We reject the daily 8 and 15 at around 31.75 at open. So that was a big key sign that it was safe to go long. We're rejecting the range and the moving averages, and we slipped down to the daily 21, which aligned with 30. So it was a perfect, we're trapped between 32 and 30, we reject 31.75, let's go long. We get down to 30, we lock up everything, and we start to see a bounce at 30, so we're going short. So that's how we used Vixx yesterday to help guide us. Today, we are going to be opening right around the daily 8 and daily 15. And we are tapping and opening near those right as everything is tapping or near its squeeze top. So let's see if we get a bounce here and start heading up, which would mean rejecting squeeze tops and heading back down to visit pre-market lows and squeeze bottoms. Or do we get through and reject this zone, which would mean the market can keep moving up through 30-minute Ichimoku clouds, while Vixx drops back down to test 30. But we've got our key moving averages there, and those key levels of 30, 32 to watch out for because we are back between them. So let's see what we get. And if Vixx tries to head higher. But hope this prep was helpful for everybody. Good luck today. We'll see you in the chat room. And if this is your first time tuning in to Predicted Trades, please check us out at predictedtrades.com. We are a service that not only offers amazing tools and great roadmaps on the day, but we also offer predicted levels on options contracts, which are the best times to buy and sell. And just for fun, I'm going to go over the Qqq trades that we hit yesterday. We hit the 326 up, the 322 down. So let's just take a quick look. at QQQ 120314 call B26. So we hit that yesterday when a lot of things were hitting their squeeze bottoms. I got in that around $1, took it up to $2, $2.25, $2.30, and got out. And about the same time switched over to the put. So as the Qs, if we go back, and we'll step in on time frame just to give you a better view. There we go. So as the Qs dip to test pre-market low and these squeeze bottoms, once we start to get a bounce and get back over pre-market low, that's when I'm in, and rode these up to our key levels, or our supply and demand zones above. Once we start rejecting there and can't get through, I switched up to puts. And so right about this point of 11, you'll find that the puts were at our beast zone, which is our buy zone. That's not what I wanted to change. Or puts the 22s. So at 11, when NQ was topping out and when QQQ was topping out, these that used to be 2.4 fall all the way to our beast zone of 0.5, 0.7 and bounce all the way back up to 4.2. I got in this around 60 cents and rode it up to $4. So, just a brief overview of what we provide, not only with amazing prep and amazing levels, but key levels on the options to buy at. So, thanks for tuning in, and consider coming and joining Predicted Trades. See you guys in the chat. Good luck today.